Welcome back to Click Capital, your go-to channel for the latest market data analysis and charts. Okay, so a bit of a continuation from what started on Friday and continued yesterday. With rates moving up again, we saw the NASDAQ and mega cap tech come off again harder than the other sectors, and we saw a little bounce here in the equal weight, but we'll come back to the charts. Let's go through the heat map today. So we can see healthcare came off, as did mega cap tech, and energy continued on its rally from yesterday. But overall, a bit mixed and another kind of flat trading day. Over to economic data, and we did see retail inventories and wholesale inventories grow a bit bigger than expected. So that could be a sign of the economy slowing down. And so far, home prices appear to be holding up a little bit, only down 0.6% month over month, and apparently consumer confidence is still there. Fear and greed didn't move at all, just really flat, quiet markets out there. Still a lot of people buying calls, not many people buying puts, so not a lot of fear out there. Did see Alibaba pop up today on news. They're going to be splitting the business into 6 different units and IPOing them. And we had AMC on rumors Amazon's going to take it over, pop up 12% too. I'll get into that a bit later. But you can look through here. Tesla had 60% calls, Baba 76, AMC 68, Apple 57. Nvidia, not so much. Amazon, yes, and a few of the others as well. So a lot of calls still being bought out there in the market. And dark pools are actually supporting this market as well. They're not abandoning it. And corporate insiders, not doing too much there. They're just pretty much down there equally at purchases and sales. Fed fund futures moved down a little bit, almost 50-50 here on whether we get a hike or pause the next reading. No news from Buffett of stepping into the banking market. He's actually buying more oil stocks. And it looks like they're going to introduce stronger regulations for the banks after all this mess. So that's going to be a headwind for the banks for sure. And Disney's laying off 7,000 people. So this is not something you really see in an economic expansion. All these big companies laying off staff. And that's what's going to add to the unemployment rate increasing as well. Schwab, there's a lot of doubts showing up about Schwab. Just like a lot of the other banks, they've got huge losses on their balance sheet. You know, they're loaded with long-dated bonds, and that's sitting unrealized losses are at 29 billion, and so they're losing a bit of deposits, and customers are going out for higher interest, safer things. So it's creating them a bit of problems here, and they're used to doing everything discounted. So everything's kind of on a fine margin, and can easily be tipped off balance. So I'm not sure what to make of this yet. I think that warrants a bit deeper dive into Schwab there. And for some reason, I don't know why, but the media keeps like to showcasing Cathie Wood. As a reminder, her flagship fund, ARK, has underperformed the NASDAQ by 40% since it IPO'd in 2014. So almost a decade of underperformance. It's cost investors net losses over $10 billion. That fund alone's made her firm over $300 million. But the media, for some reason, still holds her up as some sort of guru. Now she's calling out the NASDAQ is not doing enough. She's called out the Fed. She calls out everyone else but herself for why she is underperforming. Alibaba. So in classic Chinese capitalism, you can't get too big because they get too worried that they're going to steal the power from them. So it looks like they've been told to split up, and they're going to split into 6 different business units. So it's kind of funny version of capitalism they got going over there. You can't get too big because the government will get too paranoid that you're going to have too much power. So it's kind of like a backwards capitalism. And FTX, Bankman-Fried paid $40 million to Chinese officials to bribe them. So there's just more and more coming out of this. And again here with CZ from Binance. He secretly had 300 trading accounts, and he's front-running his customers. So they all claim to be these new finance saviors, but really they're as dodgy as any common street criminal. So it's unbelievable what they can get away with. But anyway, that's the crypto world for you. Over to the markets. So bit of a mixed, another flat day there today. Not too much to report. Volatility did come off again today. So the equity market is not too worried at all. And if this banking crisis is really resolved, then that means we could go back to the previous environment we're in, which inflation is still the biggest problem, and then rates could move back up and become the focus. We still got bond market volatility elevated. No one's really buying puts. There's not a whole lot of fear out there. And these spreads are kind of pulling back a bit here from what they had been doing. Here's the equal weight coming back up to the big SP. High beta coming off, now coming down to some lows. Growth versus value coming off again. The NASDAQ looks like it's turned after being so stretched up here. And smalls look to be trying to put in a bottom as well. The yield curve, very volatile as always. We did see the 30 and the 2 year actually go into positive territory just 3 sessions ago. Now it's back down to 0.3. A little bit of risk coming back into the market there, and rates holding steady. We've got the 2 year at 408. So if this banking crisis, if we've seen the worst of it, we're not going to see any more bank failures. They've really, plugged it and backstopped it and all that. Then there's no reason why we can't see the 2 year come back to 440. Then, because it really sold off hard because of there's worries we're going back to GFC level stuff. But if that's all abated, then inflation comes back into focus. Then we could see rates come up, which would be bearish for tech. So we got September Fed Fund futures pricing in 4.69, and it wasn't that long ago we got down to 3.66. So there's huge volatility in the market, but things appear to be calming down. Treasuries just held up, as did high yield, and the dollar come off a bit as well. So it looks like we're going to come down and test this 101 level as we go out to a weekly chart. This could be a continuation. This could be first wave, second wave, and this third wave could take us down below 100 here. And generally speaking, that would be bullish for stocks, especially those that have a lot of sales offshore. But a weaker dollar can also add to upward inflation pressures as well. So we'll keep an eye on the dollar, as that has a big influence over a lot of things. Bitcoin, with the Feds coming after Coinbase and now Binance, they're going after the biggest crypto exchanges in America. They want to get rid of the industry in America. I think they've realized now that they don't want to compete with it. They want to do their own digital coins. Bitcoin will always be around though, because it can just move to wherever it can freely trade. But you would think it would have some downward pressure on it from the US regulators clamping it out. That can't be a tailwind. So I think Bitcoin might struggle to get above this here, and it might just choke around this point here. But with the US Feds trying to get rid of it, I don't think that's a tailwind. And commodities just ticked back up here today. We just got above our 50 bar VWAP. So it looks like this might have been a fake out to the downside, and it looks to be reclaiming this support zone here on commodities. So I don't think we can call commodities in a bear market yet. If we go out to a weekly chart, I think we could just call it still a sideways market in commodities. They're holding on here for the time being. And gold popped back up today, as did silver, and oil continued on and got over its 50 bar VWAP as well. So much related to commodities. And uranium putting in a little double bottom here and perking up. Over to the sectors, apart from ARC today, we did have semis and communication come off, and biotech and healthcare as well. We saw jets, home builders come up, and utilities got above its 50 bar as well. Overall, pretty mixed there. Gold miners was the winner. Energy did pretty well. Everything kind of just holding on, making these bottoms, tracking sideways. Not too much big movement in any one direction, really. BlackRock came off a little bit, and here's the mega cap tech that stalled. So the rates are moving back up. That's a headwind for mega cap tech. Pretty sure there's big programs that are just looking at the rates and then trading mega cap tech based off the rates here. Had AMD come off 2%. Nvidia, still too early to say whether this is a top. This could just be a pullback. We rip higher here. Do have a little divergence, but still too early to say. First Solar much the same as well. Still really overbought and overvalued, but too early to say whether we topped out on these things. Tesla as well, just tracking sideways. Not too much going on there. AMC. So rumors out today that Amazon might be taking it over. I would be really surprised. I think this is put together. I wouldn't be surprised if this is some dodgy insiders and journalists, scooping up the stock, then putting out this story, and then all of retail's loading up on calls and getting excited. We're already selling off here after hours. I mean, who knows? Maybe it's possible. I'd just be really surprised if they wanted to get into all that mess, especially since this company still chronically loses money, loses a lot of money. So I'm not sure about all that. Other than that, pretty mixed in the meme space, and the banks came off a little bit again today. Just watching Deutsche here, First Republic, still really depressed down here, Pac West. So while we've got volatility markets and some other markets saying everything is okay, the price action in these regionals is still, we're not ripping higher. Even the big guys too, they're starting to, perk up. Looks like they may have put in a bottom, but it's still not like we've done these huge, big bullish bounces in them yet where we can say, okay, well, the worst is definitely behind us. So who knows? We'll keep an eye on it. But overall for today, just another kind of sluggish, flat day. Really small range here. You can see on the S&P 39.71. Not too much happening. And I'm largely positioned the same way. Short tech, long a bit more defensive old economy stuff. And just increased that today to 60% net short. And still looking for tech to make a bit of a turn down with rates coming back up. So that's all I got for you today. Another pretty quiet day. We'll see what happens tomorrow. Thanks for stopping by, and see you again tomorrow. Cheers.